Mining Scout auf der Edelmetallmesse in München mit dem Gründer von GoldMoney, Mr. James Turk. It's a pleasure to have you here.
Thank you.
You're author of the book The Money Bubble.
Yes.
And maybe you could give us a short introduction on your person and how you got here.
Yeah, I'm also the founder of GoldMoney, and I've been involved in the gold industry for quite a number of years. The money bubble is basically a description of where we are today, and we're in the biggest bubble of all time. You know, people think that what we're using as money really isn't money in a traditional and historical sense. It's a money substitute circulating in place of money. Money, of course, being a tangible asset, physical gold and physical silver.
Okay, so what do you think about platinum, for example? Is it money for you as well?
It's a precious metal, but it's not money. It has no history as circulating as currency. It's not owned by central banks. There have been coins made in terms of platinum and bars that are circulating between individuals who exchange it for national currency. And it is a precious metal, but it's basically an industrial metal. It's not mined for its monetary purposes primarily. It's mined primarily because it's used in industry.
Okay, thank you. If you're saying gold and silver are money, we've seen a recent drop in gold price. That's been rather surprising as there's QE still going on. We have crisis all over the world, with the Middle East. We have Ebola, whatever you can imagine. You have the Ukraine conflict. Why is gold behaving the way it does?
Yeah, well, you know, gold is money in the sense that it's useful in economic calculation. You know, one of the problems we have today is we calculate prices in terms of euros, dollars, and British pounds, but we don't calculate prices anymore in terms of gold, which is what we really should be doing. An ounce of gold today purchases the same amount of crude oil it did a month ago, 3 months ago, 3 years ago, 10 years ago, 20 years ago. So in that sense, you know, gold still has the same purchasing power it's done throughout this period of time. It's just that because we assign this label on an ounce of gold, this label being euros or dollars or British pounds, we get a distorted view of what's really happening to money.
Okay. But what do you think is the impact on mines that might not be profitable anymore due to the drop in gold price? They are hitting the cash cost production right now, so it's kind of a hard time for miners to produce more gold, and there might be a supply shortage in the near future. What do you think about that?
Yeah, it is very tough for the mining industry right now, but one of the reasons why gold preserves purchasing power over long periods of time is this above ground stock of gold, which we accumulate throughout history, continues to grow about 1 3/4% per annum year after year after year. Sometimes it's a little bit less, sometimes a little bit more. But this consistent growth in the money supply of gold is basically the reason why it preserves purchasing power. We've seen times in the past when the mining industry has had difficult circumstances before. The late 1960s was also another period that was very difficult for the miners. Typically when the miners are having a difficult period, suggests that gold is very cheap, and that's a good time to be buying gold, as well as probably buying the miners if you're interested in investing in mining shares as well.
Okay. Do you think we have hit the bottom right now, or is there more potential downside potential?
Well, when it comes to markets, anything is possible, and you really cannot predict the future. Nobody can predict the future. So I always leave open a 10% probability for anything happening. You know, if you'd asked me this question a few months ago, it was 1180 to bottom, I'd have probably said yes, with a 10% probability we could take it out. The best thing that could happen now is that we see a V bottom. In other words, we've come down sharply below 1180. I'd like to see us go back sharply back above 1180, preferably above 1200. If that happens by the end of the year, then I think the level of confidence that this is the final bottom of this correction that began 3 years ago, I think then we're probably safe in saying that, yeah, we're going to start resuming this bull market that began many, many years ago.
What do you think is the chance to break through the 1,000 market for maybe just even a day or within one day?
Well, you know, if we break through 1,000, that's basically saying oil prices are going to go down to $55 a barrel. Prices of other commodities are going to drop, you know, another 20%. Again, anything is possible, but I just don't see it. You know, the central banks are printing and printing and printing. You know, okay, the ECB is, let's say the Federal Reserve is stopped their quantitative easing, but they're still expanding their balance sheet. The ECB is saying they're prepared to put €1 trillion of liquidity into the economy. Japan is putting in trillions and trillions of yen into the economy. All of this printing is going to be raising asset prices. It's debasing the purchasing power of national currencies, and ultimately that's what causes the gold price to rise.
Okay, thank you very much.